Welcome. In this video, we're going to be breaking down this S&P 500 trade that I took using ICT concepts and a top-down analysis. As you can see, the trade was perfectly executed with very little drawdown. So if you want to understand my ideas and logic before taking this trade and during this trade, how I managed it and everything, stick around because this video will be very insightful. If you find this video insightful, don't forget to hit that subscribe button so that you can be notified and see other videos, as I will be posting more videos on this channel. I started my analysis on the weekly chart, which is very important because it gives you the weekly direction of the market, which increases your win rate on the lower time frames. As you can see, in the last few months, price has been very bullish with only 1, 2, 3, 4 down candles, which makes sense for us to assume that on this week, price will be bullish. We will now drop down to the daily chart to determine the daily bias. It is important that when determining the daily bias, we only focus on the trades that are in line with the weekly chart, meaning if the weekly is bullish, we must only look for bullish trades on the daily. So as you can see, on Thursday, price dropped down significantly, but where it stopped is where it made me realize that on Friday we would have a bullish day. This was because if you look at the left side of your chart, you will notice that there's 3 down close candles. Those down close candles form an order block, and if you get 50% of that order block, that's where price stopped, which is the threshold. The bearish order block acts as support. Hence, that's why on Thursday, price failed to trade below that threshold of 50%. So this allowed me to see that on Friday will be bullish, and indeed Friday was bullish. So that's where I got my daily bias from. We will now drop down to the 4-hour chart to just get a perfect picture of how strong this support was. As you can see, the threshold of the order block had a very strong support as all 3 candles failed to close below that threshold, with all the bodies staying above the 50% threshold. We will now drop down to an hourly chart so that we can look at the Friday trade that I took and have an understanding on why I took it and the logic behind it. I started my analysis on the midnight candle. As you can see, price started trading bullishly straight after midnight, but then when NFP hit, price traded down and took out most of the traders. So that's why I don't trade NFP, as it tends to take out both sides of the market before choosing a direction. So if we draw down to the 15-minute time frame, you'll be able to see why I took this trade after NFP. So this is the chart that I executed my trade in. As you can see, after NFP, I waited for price to hit a shift in market structure, as I was bullish on the daily and weekly. So I anticipated that after the shift in market structure, price would trade down into my fair value gap, and the fair value gap would act as support for the day to be a long day. This led me to be comfortable to take the second trade on the second fair value gap, which was executed perfectly until my take profit hit. I hope that you found this video insightful and you now have a better understanding on how to do a top-down analysis using ICT concepts. If you have any questions, you can type them on the comment section and I'll be able to get back to you or make future videos on that comment.